Hey everyone, this is Corey with Sims Investment Management, and this is another monthly market update. And this newsletter, this video, can best be summed up in a quote by Nat Friedman recently that I saw, who is a technology executive and investor, that said, "Pessimists sound smart, optimists make money." I feel like that's very fitting with where the market is right now, with what the media continues to try and portray of a very doom and gloom type of environment. But a lot of the data just doesn't really support that. So we're going to dive into that a little bit. One of the things I am including in this month's newsletter that I encourage you guys to read is a very short kind of overview of the history of inflation in our country. I thought it was really well done, and it could give some pause after reading it of kind of the environment that we're in, to say that we are in a very high inflationary environment, especially when you look at like a lot of the metrics compared to what has caused inflation in the past. But I also think it's important to remember, and we're seeing this in a lot of the earnings reports, that we're seeing the consumer shift from a very back to a very service type of environment instead of a goods, right? So during COVID, services all shut down. So we all started buying a bunch of stuff. And manufacturers were shut down or put on pause. We then had shipping container issues with the brilliance of China was shipping stuff to us in shipping containers, but then they weren't taking empty shipping containers back to China. So we ended up with a bunch of empty shipping containers here. And there were just all these little nuances that were causing things with materials and goods to get delayed and cause inflation. But we're seeing the American consumer start to shift back more to a services type of economy, which makes up about 70% of our economy anyways. We're seeing that in hotel prices and rental car prices and airfare, even just in some of the things that we do around town, right? We're seeing those prices increase. It's going to take a little bit of time for wage inflation to catch up, but I do firmly believe that we will break the back of inflation, and we've potentially seen it peak. Inflation in itself is not such a scary thing if we look at history, in the sense that once we know the recipe of how to break it, which is essentially having the consumer stop spending as much money. It's why I struggle a little bit with the concept of why we've kicked the can down the road with continuing student loan payments to be deferred. Doesn't make a lot of sense if we're trying to break inflation to keep giving more money to people that are paying or not paying on student loans and then dump that into the economy. So I think there have been some errors in some of the decisions that we've made collectively as a society as we've gone through COVID, but I am very optimistic when I read earnings reports. We're seeing insider buying, which means that executives are buying their own stocks. They're buying their own stocks at a pace that we haven't seen in years. Well, if you're an executive of a company and you're buying your own stock, it's because you think it's undervalued. And that's the only reason you would do that. We're seeing valuations come back in line with what they've been historically. So if we put this very simply, if you have a 20% decline in the market, but what we expect companies to earn as profits over the next year stay stagnant, then the valuation of the overall stock market has just come down 20%. If you have a 20% decline in the market and you also expect earnings to drop 20%, well, then the valuations will stay the same. And that is not favorable. What we have seen is the first example, where we had a 20% decline in the market, but earnings expectations for companies had stayed the same, if not had grown. So that means that the market has actually gotten cheaper on a valuation standpoint. When you think of the earnings growth and the market pullback, we got about a third cheaper from a valuation, which means that the price that you pay, you're actually getting more relative to company earnings. I know that's a little complex and maybe a little convoluted. I'd be happy to talk you through that. We also have some Teaching Tuesday videos on that concept. The point being, or the main takeaway there, is it's not doom and gloom, and the market very much responded to and is very much in fear of a recession. If you look historically speaking, though, recessions are usually very well unknown. They kind of come out of nowhere. if everyone is talking about a recession and using the big R word, we're probably not going into it, right? Because everybody's typically not right in anything, right? So that too does not give me as much concern as what I think the media tries to make it out to be. The last thing that I'm going to add on this is if you look at like a lot of the froth in the market, it's gone into what we would typically call alternative investments. Think of crypto, think of even the like baseball card memorabilia type of craze that we're going through. It's going into a lot of things that historically don't have a lot of fundamentals behind it. And even the term alternative investments, I've always laughed at. It doesn't make sense that you would pride yourself on being something that has historically returned a 10% average annual rate of return for the past 100 years, which is what the stock market is. But people in alternative investments pride themselves of not being the stock market. The stock market has made a lot of money for a lot of people because you're buying companies. You're buying companies with fundamentals and that make money. So I continue to beat the drum that I don't think things are as doom and gloom. If we look at inflation in 1982, when it peaked, for the next 5 years, the market went up 300% in a 5-year period. Maybe that's what's in store for us over the next few years if we get inflation under control. Who knows? So again, pessimists sound smart, optimists make money. We're optimists here. We believe in financial plans and positioning you well for the long term. If you have any questions on this or you think somebody needs to see this video or hear this message, please send it to them. And until next month, I hope you stay safe and have a great 4th of July and start to your summer. Thank you.